Hey everyone, welcome back to my channel. I just wanted to go over for this video Wednesday, June 5th price action. So let's just jump straight into it. Right now I'm on the monthly chart. I expected June to be bullish. Let's go down a weekly. We're going to be analyzing the 5th, which is on this week. Previous week moved away from this fair value gap here. And, this week was targeting last week's high. Let's go down to the daily. Here's Wednesday. Because of this candle right here, I expected a little bit of a pull down to be just a little bit of a pull down. I didn't know how sharp it was going to be. And then our move up. Let's go down to, let's go down a 4 hour. Not too much I want to point out on the 4 hour chart, except for this fair value gap over here. I didn't wait. If you look at my last video when I traded this, I didn't wait for price to move through this fair value gap. I had paper hands that day. That's okay. So I'm going to go into this a little bit, but I want to do it on the 1 hour. Okay. So yes, we'll be analyzing this over here, but I would like to start with an overview. So we have an OTE. So I would put my fib here, drag it up to the highest body here. On Monday, we came down and went into this breaker, but there's something else over here that I missed on Monday, which would have helped out a lot. I'll just go ahead and point it out. It's this Reaper right there. See that fair value gap right there? Kind of missed that. Well, not kind of, definitely missed that on Monday. But I wanted to talk about the cycle that we were in before we got to Wednesday. So this is the reversal here, down here. This is the expansion. This is the retracement, consolidation, expansion. Once price starts expanding like this, once it's in the expansion leg, there are not a lot of places that it will retrace so you can get in. So there were a lot of people on Wednesday. I had been watching like on TikTok and on Instagram, and they were just like, I don't know where to get in. I don't know where to get in. There was a couple of places to get in that I thought were pretty obvious, but some people try to short over this high here. So anyway, let's get down into Wednesday's price action. Okay, right now I'm on the 15-minute chart. I have midnight here Wednesday, and then this is midnight. This is the midnight of Thursday, and we're just down on the 15-minute. I've highlighted the midnight open and the open of 8:30 a.m. I've put a line on 10 a.m. because I was looking to trade after news. And let's take a look at this. So, first of all, if you got in down here, I got in with a micro down here. I ended up getting in with my mini up here. But you got this is prime real estate down here. On a bullish day, if you can get under 8:30 a.m. and midnight, you've got don't let that go. Don't let that go until you're proven dead wrong. On the 15, I wanted to point out, price is moving up and there's a daily swing high and that that obvious all-time high, swing high that was up there. I probably should have put that on the chart. Hold on. Okay, so this is what we got. Moving on the way up, moving up, moving up. And we have this small little fair value gap that was left open. This one. So, but when I was in down here, I knew we were going to get to at least this daily swing high. I didn't know we were going to get all the way up there. So that's all right. Okay. So what I really wanted to show, what I really wanted to talk about for this price action video was really on the 5 minute and below. So let's look at my notes here. First, I want to point out, I want to draw out the New York kill zone. Let's put that there. Okay. There it is, right? So we know that the stops are below and above these, 1 second. Okay, I'm back. I forgot where I left off. I had to take like a 2-hour phone call. So I'm just going to highlight this as well. So I'm highlighting London. Okay, so this is New York kill zone, London kill zone. There is a fair value gap right in here. I had my eye on that because fair value gaps or OTEs that happen within the New York time frame, the New York kill zone, are high probability. 120. Okay, so there's a fair value gap here that we will go over once I go down to the 1 minute chart. Okay, there's a fair value gap right here, very tiny. I knew that price was eventually going to come here, and it didn't go here today, but it did. I mean, it didn't go here on this day, but on Friday, which is today, I'm recording this at the end of the week, it did hit right here. Maybe I could talk about that in a different video. Let's just get all these fair value gaps. Okay. This one here. Okay, so this is really all I wanted to show. 1600 for the close. Okay, now in my other video, I was saying how I was fading some people that thought that this was going to come down. And I was like, this is not going down. They thought it was, they got it at the high and they thought it was going to come all the way down here. And I was like, there's no way that that's happening. First of all, this fair value gap, right? Usually we wouldn't want to take a 5 minute fair value gap that's close to the high. That just wouldn't be smart, because you would want to get in ideally closer to the bottom of the range. But I want you to see something. Now that you know what these two lines are, we don't need to know them anymore. I just wanted to show like the price under here would be a good place to buy. So I'm going to take this off. I'll put it back on when we go down to the 1 minute chart so I can show you something. You see this low right here? This 5-minute swing low, then a swing high, right? So price went under, over, right? And when that happens, you get into the first retracement. What was the first retracement? The one that was the fair value gap that was here, closer to the top, which is also an inversion. Fair value gap here, right? And funny enough, let's put our fib on. I'm running the fib on the retracement and projecting it up. Let me slide this over. Look at that. Hits the all-time high to the tick. Bang. But, I would have been out of my position by 4:35. So it got pretty close. But it hit it like, after I would have been out of the position, but it hit it for the day. Let's get out of here. Had an open fair value gap here. That was good. I got out right here, sadly, somewhere in here. Look at all that I've missed. I'm starting to notice, I miss a lot of these really big runs sometimes because I just didn't wait long enough. Now let's get down to the fun. 1 minute chart. Well, actually, let me go back up. Put this midnight line back on. All right, now let's get down here. Okay, so if you were looking at my last video, the one where I took the trade on this date, you saw that I had a micro. I entered in on a micro down here. Okay, let me show you why. What do you see down here that would have made me get in? Not just because we were under midnight, but what's in here? I'm going to take this off, by the way. Well, there was that fair value gap, right? But I didn't trust that. So there was something else. All right, I'm going to show you now. It was the breaker. I chose this one because the body was thicker. So if you look at my other trade, I saw price kept pushing and really couldn't get past the open. Got too far away from the mic. Really couldn't get past the opening of these down close candles. So it was being held up. All those things together made me feel comfortable about taking it on a micro, but I didn't feel so confident about it to take it on with a mini. And unfortunately, I would have been in here if I was paying close enough attention, but I was so focused on that micro that I ended up missing this one fair value gap here that I really should have taken because it was beneath the close of the 10 a.m. bullish candle. So if it's a bullish candle, we want to enter in at or below the opening price. And that was what I missed. But I ended up getting in up here. Well, no, I got in up here after it started to pull down from the top. And I don't know, it was just kind of funny to watch some people online just be like, oh, this is dropping all the way down and talking about how much they know about the market and stuff. And I'm watching like their bot go against them. That was just kind of weird. I was like, you guys pay attention. It's moving up, you know? So that was cool. Let's see. And you know what? If you were short, if somebody was short here, you have to find a reason to go long. Don't just go long. Don't just switch your position because you see it going against you. Like, you have to have a reason. I saw a lot of people do that too. They were just like, I have a reason to go. They didn't really have a reason to go up. They just did it. Anyway, you saw me get out here, and then I got in again right under this candle. I'm not sure if this was this 5-minute fair value gap was there, but I got in right under that candle because there was a divergence right there on NQ. NQ just didn't push below that. So, okay, let's take some of this stuff off. This was pretty important. There was a divergence here on NASDAQ, but this was during lunch, so I didn't take it. Oh, that sucks. Let's move. This run up into the close was from, you see this low? High. Lower low. We needed a retracement. Remember, you need at least 4, maybe this is 4 candles for the retracement. I think I did this on the 5-minute chart. Actually, I would have put it right there on this 1-minute chart, but I was like, why isn't this working? Because I'm on the wrong chart. So, low to high, 50%, right into the close. Yay. And whenever we're moving through fair value gaps like that, it's always kind of slow and methodical. It's never really that fast. And so, I also wanted to say, I guess this took people by surprise, this big move, because there was no red news. I guess it was Fed blackout, meaning there was like no federal meetings this weekend or this week or something. But I have noticed when there's no when there's no red news, the green news acts as red news. When there is no red news, the green news can act as red news with the power and the force behind the movements. That's just an observation. Okay, so that's it. That is all. And I just want to say, trust your hand. If you have a good hand, look for reasons to stay in the trade. Don't look for reasons to get out of the trade because you took the trade for a reason. So there's only, after you get in, you should only be looking for reasons to stay in. And always remember, you make money by leaving a little bit of money on the table. All right. Thanks for watching. Have a good day.